The outlook for Europe has darkened considerably. We were very positive in terms of exiting from the pandemic, where we had a very strong exit with very tight labor markets, something Europe has not seen before, and as a result of extremely strong policy making. Everything was changed with Russia's invasion of Ukraine, and that led to a huge terms of trade loss for Europe. An energy price shock required tighter financial conditions, and as part of that we see a slowdown in growth next year. We see now a number of technical recessions, and we will see recessions in Germany and Italy next year. So the outlook has darkened from what we had before.
How do you think governments individually are managing that challenge?
So governments are in a difficult situation. What we are seeing is, and what we have been recommending is, we need to have monetary policy aligned with fiscal policy. What needs to happen on the monetary policy side? Because of the persistence of inflation, because again of the price shock on the energy side, monetary policy needs to be tightened, and in many countries it has already been tightened, and that needs to actually continue, and many countries will need to go into a constraining environment on the monetary side. That needs to be coupled again with support on the fiscal side, and we have been advocating that fiscal supports the fight against inflation by being non-expansionary. Our forecast for next year so far is that there will actually be a consolidation of fiscal position in Europe. However, many packages are being designed currently, and therefore that fiscal stance may actually change. And it's important to keep in mind that it should not undermine the inflation fight done by the central banks.
What about those governments that say they have special pleading for inflation fighting measures, or measures at least to reduce the impact of the high energy price? And I'm thinking namely of Germany, which seems to have upset a lot of other countries in the Eurozone with this very large 200 billion euro package, which seems to run against the argument that you're making about the need to align fiscal and monetary.
Our advice to all governments in Europe is, yes, you need to address the cost of living crisis, and you need to focus on the vulnerable households. What we are saying is, please be targeted and not be broad-based, because the fiscal costs of being broad-based are very high and vastly higher than being targeted. One number, when you compensate fully 40% of the poorest household in Europe for 22 increase in cost of living due to energy prices, it costs you 0.9% of GDP. The average package in 2022 is 1.8% of GDP. These packages are also not going to be temporary, because we are talking about the next winter. The energy security situation is going to last into next year and the next winter and into 2024. That's why targeted is important. That's why it's important to be fiscally efficient. That will also support the monetary policy side. And one point which I have to make, do not blunt the price signal, because for the energy security side, you need to lower demand. And demand can be lowered by voluntary campaigns, but the price is one very important instrument in order to lower demand, so that this price signal needs to feed through.
Are you making an argument there for not having a top-down imposed price cap on gas, which is what Europe is arguing about at the moment?
We are arguing on a national basis that when you are designing these packages, think about lump sum transfers to vulnerable households, or if this is not feasible, look at block tariffs, lifeline tariffs, where you subsidize a minimum consumption, but if you go above that, you pay the market price, or you pay a higher price than what you had been paying before.
Let me then ask you about the unity that you see at the moment, both on tackling the energy crisis and tackling Europe's position with regard to the aggression that we're seeing from Russia. There does seem to be broadly unity at this point, but do you worry that as that energy crisis drags through maybe into a second winter, if that's indeed what happens, we may begin to see some of this unity crumble.
When we saw Europe during the pandemic, we saw unity, we saw solidarity, we saw coordination of policies, we saw common instruments, and we saw a success story. More difficult now because countries are affected differently by the energy crisis, have different systems in place to deal with the vulnerable groups. But again, unity is going to be important. Yes, you need your national packages because you need to maintain social cohesion to go through the cost of living crisis. But energy is a European issue. The energy market is a European issue. So more solidarity, more action with common policies on the European level would be useful. And with regard to Ukraine, we see lots of solidarity, we see lots of unity across Europe. And of course, we hope that support in terms of the economic element of supporting macro stability in Ukraine through external funding will continue. We had external funding this year of $35 billion. This was the largest and fastest fundraising drive for Ukraine. And Ukraine needs support next year as well, and that fundraising drive will start now.
And just one final question. Obviously, the ECB has now pivoted to a much more aggressive interest rate rising stance. Any thoughts as to how cautious or careful the Governing Council should be about damaging the prospects for sustainable growth?
Yeah, we have been recommending to the ECB to forcefully increase and normalize interest rates. That's important in order to anchor inflation expectation, so avoiding any de-anchoring, which hasn't happened yet, and also to avoid wage price spiral. That has been so far the result of the policies. Next year, probably the ECB will need to continue to tighten. But as you said, one needs to look at how growth is going to behave next year. Under the baseline, that is likely that tightening will need to continue. However, if demand were to continue to weaker than what we have in the baseline, then both monetary policy and fiscal policy need to be looked at again and may have to be recalibrated.